So the Fed does not directly set mortgage rates. Most economists expected that the Fed would cut the federal funds rate at their meeting today 0.25% just to try to head off a potential recession. So what exactly is the federal funds rate? It's a short-term interest rate banks charge each other, and it does impact borrowing costs across the economy, but it's not the same thing as mortgage rates. Still, the Fed's actions can shape the direction that mortgage rates take. Now, this is the part that might surprise you. Mortgage rates tend to respond to what the financial markets think the Fed will do before the Fed actually acts. So basically, when the markets anticipate a Fed cut, that outlook gets priced in and mortgage rates ahead of time before the announcement. And that's exactly what happened after a weaker than expected jobs report was released in August and September. Each time the mortgage rates ticked down as financial markets grew more confident a Fed cut was coming. So when the Fed goes with a 25 basis point cut as expected, it's already baked into the current mortgage rates ahead of time, and you normally won't see a drop on the day of the news. So if they went with a bigger drop and they cut 50 basis point, mortgage rates could have come down a little bit on that news with the surprise. But the bottom line is mortgage rates likely won't drop sharply overnight, and they won't mirror the Fed's moves one for one. But if the Fed begins rate cutting cycle, markets could continue to expect it. The rates could trend lower this year. However, that depends on how the economy evolves, and surprise inflation data, or the jobs reports, unexpected shifts could quickly change that outlook.